Welcome, master students, to week number one. This is going to be your lecture number one. Actually, you made the decision. You have made it to the class. Oh, man, this is where things shift for you, man. This is where you make the conscious decision over whether trading is going to be your go-to career or not. I'm very excited to be sharing this with you today. And by the way, just for you master students, and for everyone else that is watching today, I am going to broadcast this first week live. And we are actually live on YouTube as well. And we're going to introduce the first week here to the world in hopes to gather some more master students, right? And on our path to the 300th master student, which we are pretty damn close now, team. So congratulations to you and congratulations to your families, right? Because I think that if you stick to this course, if you stick to the curriculum, if you stick to our processes, then there could be room here, guys, to really make a change, to really make a difference. I know that a lot of you here are already on the path to your truth, right? To your actual career shift. And I am eternally thankful to be sharing the stage with you sometimes and all the time, actually. I don't know why I said sometimes. But yeah, team, today has been a very interesting day. As you know, I'm going to be flying out tomorrow morning. And I will be postponing the upcoming lectures until the following Saturday. So remember, team, Saturday, Sunday, Monday, and Wednesday courses will they will be continued starting the next Saturday, the following Saturday. So, but yeah, let's go ahead and get ourselves started. Let's go ahead and find out what's really good in the hood here, right? So let's get it going, guys. All right. So what is trading, right? What is trading in general? So trading is the exchange of an asset, a security, or an equity, right? We're talking about a stock or a contract at a current price to meet a future price. Now, you'll be surprised that this is really, really beginner's information here. And that's because it is triggered towards the beginners. But I am going to display to you in the further weeks, in the coming weeks, right? You'll see it in your syllabus too. We're going to do some candle analysis. We're going to do some technical analysis, psychological analysis. We're going to do some statistical analysis even. And we're going to touch on advanced topics and even execution topics as well. Now, what I mean by executions is once you know the criteria, once you've understood how to make a plan or how to make a system or how to build your system, how is it that one decides to execute the system following that criteria? Well, that's what we're going to learn starting in this mentorship program. Okay. So let's go ahead and move on. See what else we got. Okay. Now, if we're talking about historical growth and we're talking about buying a stock, right, or an equity, an asset from a current level in expectations that price may be at a certain higher level in the future. So just to give you an example here, IBM, December 31st, 1998, $90.73 valuation. Well, by March 18th, 2013, it grew by 127.59%, a 15-year span, right? Now, to put things a little more impressive, you can see Amazon there for yourself, but to really impress you is to give you Apple, right? Apple's valuation on December 31st of 98 was 42 cents. Well, by the time we hit December 31st of 2021, we are at about 44,032%. Nina, baby, your mic is live, honey. Nina, baby, your mic is live. And let's go ahead and continue on this path to upside, right? If we are to know exactly how we're going to make this this entry, well, in strategies, I also teach the investment strategy. How is it that you enter? How is it that you enter the market? You know, it's okay, Quinny, honey, it's okay. I understand. Sometimes, we can press the buttons and things happen. So, but for those of you on YouTube, let me know that I am still live with you. Let me know that you can hear my voice. All you have to do is press Y or something, or throw an A in the chat, and let me know that you can hear me here. Right? This was a very last minute decision that we did to bring in the entire live experience here. So Tara, you can hear me. Thank you so much. Okay, I think we're good. We're doing good. Okay, team. So let's continue this thing. So if we were to know or have an idea over how something can move in the future, then we may have an edge over positioning ourselves or continuing to position ourselves into the future. So you're thinking to yourself, what do you mean by continuing? Well, it's not always, guys. The perception or the idea of buying low and selling high is not exactly what you think, right? Because if we have an ever expanding and an ever evolving permanent asset, such as the ones like mentioned here, like Apple, Nvidia, right? Things that we know could be around for a very, 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 very long time. Then the bottom is the floor. It may be invisible. It may be something that you're not able to perceive or understand because the magnitude of growth is just massive. Well, in 1998, when it was 42 cents, slightly after the iPod was introduced by Steve Jobs, the idea of playing music through a digital device that has a little screen where you can separate things into folders. Now, it wasn't that it didn't exist in 98 or 99 or 2000, because you certainly had MP3 players. They were introducing the smaller disc, right? It was like a 2-inch wide, 2.5-inch wide disc that you could actually dip right into this little player. And it also had like a screen. I mean, granted, the screen looked more like a calculator than anything else, but it had a nice little orange backlit thing, right? So if that's something that was already around, then maybe we can advance the idea. So a creative mind comes in. A forward-thinking mind comes in. Steve Jobs, right? He comes in and thinks of this device that has a hard drive in it, similar to a computer. Now, the hard drive would be set around to larger digits, right? So I think they started with around 1 to 3 gigabytes of maybe even in the you're going to have to correct me on this one, but it did start into maybe 1 to 3 gigs. And 1 to 3 gigs in MP3 files is already kind of it's kind of a large number, right? So you introduce more space for more songs, no extra hardware, meaning no disc or anything other than your headphones and this white thing here that has a backlit screen. And it has something way more important. It has the game Snake. Right? So not only are you getting a little bit of listening entertainment, but you're also getting some video game entertainment too, just to kind of push that narrative a little bit further. Similar to the watch that the calculator watch back in the day, right? Except this time all in some type of music device introduced in late 90s, early 2000s that pushed Apple from 40 cents all the way into the 97, 98 cent level, almost breaking compliance. Shortly after, it did. It went into 104, went into 109. 109, it was just a critical level, right? After that 109 break, sure, it capitulated. It came back down to your 60s, 70s, but that's not the end of the run. You've now made a new higher high, an all-time high, with a new catalyst. So if this guy here has been designing things and you start doing your research on the fundamentals, because that's really what it was all about back in the day. Fundamentals. What are your balance sheets like? and you start to see that this company, Apple, is innovating, then your decision here would be, do I invest in their .com? Do I invest in their idea? And you choose to. Let's just say you did. So you choose to invest at around 60 or 70 cents, a bunch of shares. And then next thing you know, the thing is worth like $140 or $130 in like 10 years. Well, yeah, I know, I understand it's like a 23-year span here, right? But Apple, it's just to give you an example that it's here to stay. Those are investment strategies. We make the decision. We go through the fundamentals. It's all good. But here's this little bit of a tidbit. What if you don't want to wait 23 years? What if that's not your game? What if your game is to maybe enter the market for a shorter term? What if you want to swing trade? What if you're saying, I don't want to wait years for this? What if is there a possibility for me to gain like over a few days? Yeah. Swing trading. Finding the position, finding inflection, finding a reason to get into an asset with a short-term expectation because of some underlying catalyst that's bound to come out. So you swing it, maybe 1 week or 2 weeks entry. And you buy at this low and you sell at this high. Great. That's awesome. You made it happen. But a even further tidbit. In 1971, Jim Simons introduced to the world short-term trading, day trading. Now, he's the founder, owner, CEO, whatever, everything of Renaissance Technologies, the Medallion Fund. He is the person that literally introduced the mean reversion into the price, into literally stock trading. It's an incredible innovation. And it's used even today. You hear them all the time. You hear about Bollinger Bands. You hear about 2 standard deviations. That's exactly what it is. We tend to run 2 standard deviations up and 2 standard deviations down. And we have a mean in between those areas. Well, that was introduced by him. Now, he found that he can become infinitely more profitable than his surrounding hedge funds or institutions by simply trading a shorter term risk. Man, having that advantage is massive. Right? It's absolutely amazing. So let's go ahead and now move on to the next slide here and see what we got. Okay, so why are you trading? Now, this is something that you don't have to answer to me right now. You don't have to answer to me, period. But we're going to have to find out who you are or why you are, right? So what reason could you have to start trading in the first place? Reflect on that. Is it a sport or hobby for you? Is it out of boredom? Could it be out of disparity? For family? Is it a requirement for you to do it? Or are you just curious? What could it be? Well, I'm going to go ahead and share with you my personals on this too. Many of you already know my story. I personally did this because of disparity. But quickly I found out that that was entirely the wrong answer. I couldn't continue that. I couldn't let that be. The disparity thing was in a sense slowing my rate of I guess absorption, right? I couldn't, maybe the wrong word there, but I couldn't absorb enough or fast enough, right? I couldn't absorb fast enough. So that kind of put this little bit of an issue, until I realized that maybe it's not about, maybe this is not, or it's never been about me just trying to get into price and then exit somewhere, right? Which is going to take me to the further examples here. Now, what type of trader could you be? We just talked about some fundamental catalysts, right? So it's a trader who trades based on a company catalyst, right? Company earnings, acquisitions, share buybacks, forced share recalls, bankruptcies, or maybe even a positive forward guidance, a future promise. Or are you a discretionary trader? Maybe a trader who executes based on discretion, intuition, your gut feeling. Your gut tells you that this, or your gut tells you that, right? So now this trader often has a lot of experience in charting or, price action in general. Now, what about a systematic trader? I have a lot of systematic traits myself. Could you be a systematic trader? A trader who trades based on mathematical models. But don't let that really intimidate you, because I know often that many of my students, they get so intimidated by me saying standard deviation. And it's really not that big of a deal, guys. It really isn't. Not at all. And we learn it here, right? But often the primary math used, sure, it's statistics. It's a probabilities trader by a system, but the system isn't digital, or it doesn't have to be digital. So let's make this kind of happen here. The system that you're going to build is actually by paper. Written. It's going to be cataloged into a notebook. As you build yourself, as you start to understand price action and you start to understand how price reacts, that's where our edge comes in. Our edge really comes in from understanding how price moves and why it moves. And what are the areas that price is likely to resist from or support from? Right? Okay. So if that's already something we know, then let's move on. Okay. I need you to not read this so much for what that is. But I'm going to explain to you. I'm going to explain to you something. The trader that you should not be is the gambler, because, and I'm gonna really elaborate on this, okay? There's a reason why the NYSE is the NYSE, and there's a reason why Vegas is Vegas. If they were both in the same, then they would be the same, but it's not. A lot of the times, you have similarities. A wager, a bet, that something is probably going to happen based on some signal or something, right? That's okay. It's okay. But in stock trading, we are traders, right? We are not gamblers. We are traders. And we have a system, and we follow the rules, and we follow the thing. It's not to say that gamblers don't. They have a different system. Right? In this case, you're not on a table here with 6 to 7, 8 maybe participants on a table of poker. You're not in that. You're inside of a trading asset. So think of it like this. It's just to give you some bottom line example here. If you're trading Tesla, now Tesla is comprised of millions and millions of market participants. Now, the variable becomes enormous. It's so infinite that it's so chaotic that it reaches a point to where you can identify Tesla as its one person that you can evaluate psychologically. So what I'm telling you is that when we are traders, we are not only traders, we're also psychologists of the mass. I want you to think of it like that. You're going to bring in Tesla as the one person. The collective group is one, right? You're going to bring Tesla in, and you're going to sit Tesla on your couch next to you. You're going to evaluate it. You're going to tell it to, lay down, relax. You're going to ask questions. You're going to let it talk. right? So it's going to speak to you. It's going to tell you what it's feeling, you know, and then you're gonna make a conscious decision over where action can happen. Whether you think the price is going to go up or down, think of it as happy or sad, or are you neutral? Consolidation. You're going to make sure to reach that conclusion on your own. You're going to evaluate the stock to understand what its properties are. That's exactly what an asset is the collective group inside of the one asset gives you that one type of character. So we know that Tesla is very volatile. We know that it's like a stallion, right? It's like a wild horse. The thing is up and down like crazy. It's everywhere. So that's something that we have to consider here. We have to consider that it's a wild one. Now, what if we bring in our next patient, and it's going to be ticker symbol F for Ford. Now, for those of you who know that ticker, you know that it doesn't really move much. You know that it doesn't do many things, right? So you now know that this is more of a calm character. It could be a lesser risk character with, sure, growth, but the growth would probably be more passive than anything. Really passive. Not enough volatility to even trade it in a day, unless it has some type of volatility or catalyst announced. Yeah, sure. But overall, it's a slow asset. You know, it really doesn't move too much. So this is where you separate from a gambler, is because you've done your diligence, right? Your due diligence, your DD. You've done it so well that you know what the probabilities could be for price. And you have a pretty good understanding over why that price is going to happen. Opposed to sitting on a table here with 7 or 8 participants, or 9 or whatever that is, including the dealer, where you know nothing of the dealer, you know nothing of the 7 or 8 other people beside you, and you have a complete random selection over the cards that you're going to receive. It is a different type of discretion in a different type of psychology. So what I'm saying is that in trading, you may have the upper hand because you're going to go into it knowing a lot of it. And how do you know that? How do you know what it even is? You know, it's just, it sounds like it's just so damn variable. It's everywhere. You know, you're not lost, guys. You're not lost in this, okay? Check this out. What you're observing here is price. Let's just go to, say, the SPX for the S&P 500. So this is just your price, right? But when you're observing price, you're able to see where things were per se fearful, right? And you can see where things were per se greedy. You can see the upsides clearly. You can see the downsides clearly. Okay, now, but what does it all mean? Well, that's what I want to show you is that what it means is that we are all collectively fearful. And we are all collectively greedy. Thus introducing one character, an individual. The SPX is one character that you're going to evaluate. And by observing its history, you can see how it's been. Hey, how you been? Well, why don't you take a look? I've been okay. I would say pretty freaking good, historically speaking. I've had my ups and downs, but who doesn't? I've had my trials and tribulations. Who hasn't? Right? Okay. Now, speaking on the gambler side of things, where we can join them is here. I know many traders that have the knowledge. They have the ability to execute on price, right? And they are able to make decisions more on an educated level. But they're lacking the one thing that a gambler, or hopefully, I would say an experienced gambler probably has. And that one thing is execution. And I'm not talking about the way that you execute it. That's a strategy. That's something that you learn later. But what I mean is, do you have the guts to pull the trigger, to put live cash down, right? Do you have the balls to do it? That's the thing that I'm talking about. Is will you have the infinite courage to put down live money on a thesis that you potentially built? That's where I think the gamblers from Vegas benefit and can exceed further levels than a trader who never learned to gamble. That becomes a very powerful tool, because you can have all the knowledge in the world, but if you can't execute when the opportunity arises, then you're probably never going to continue. You're probably never going to grow. So it doesn't take just the talent. It doesn't take just the ability to know the rules and building your system and knowing to evaluate the asset and all that. It also takes a bit of courage and the ability to know when the opportunity arises or not. So that's extreme discretion. And through that discretion, you know that you probably have a future promise from the company because of a catalyst. So depending on the catalyst, on how big it is, your discretion is going to lead on, wow, this catalyst is so big, I'm gonna probably put more of a risk down on this one. And because you're gonna do that, you're already a trader that follows the rules. So you're gonna go ahead and put a plan together based on your rules base. And when that all happens, you have just become these three. You have now become a fundamentals trader, discretionary, and systematic. It's never to say that you can just choose one or who are you in the market, in the markets. It's not about that. It's never been about who you are in the markets. It's about how much you can collect to bring in your higher probability play. Just because one person believes in the Elliott wave theory and another person says that, no, it's actually going to be technicals that are the better answer. It's not either. It's both. You know, Gnosis, that's right, buddy. The trinity of probability here, right? I love it. Now, within that decision that you're about to make, you're also going to decide who you are as a trader as far as timing. So are you a short-term trader, a swinger, an investor? Short-term trades would be everything that would be closed within the day. So open risk in one day, close risk on that day. Day trader, short-term trader. Swing trader would be opening up a position in one day and closing it the next day or so, or later. It is the laws of threes, man. I forgot that I had that conversation with you, buddy. Very, 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 very observant. And now there's also the investor. So let's just go ahead and put the investor at the threshold, at the very bare minimum of 1 year hold, 1 year plus. Now the short-term trader, your entries. Let's go back in here. Your entries as a short-term trader, would probably rely on the 4-hour, 1 hour timeframes to understand where the overall price is going. And then you're going to execute based on your 5-minute, 10-minute, 15-minute timeframes while observing your hourly to 4-hour time. That's all good, right? But that means that you would have to get really granular with your information. So you know that the tiny little microscopic moves are likely the ones that are going to show you resistance or support at some place, some time. Cool. That makes it a little more difficult. Right? Now you have to know where the hell you are. You have to now know where the hell you are in every single little minute. And that's all good. Now the swing trader would have to worry about, sure, the hourly's fine, but what about the 4-hour? The 4-hour can display to you now several days of information. If I can just go ahead and display to you here where that if I can even find it, goodness gracious. I'm talking about days. Okay. So let's just mark off this with the range tool instead. Here. This is right at the beginning of this signal here, which is going to be this line to this line, is Tuesday, September 17th to Wednesday, October 2nd of this year. 4-hour time frame, meaning that every candle here takes 4 hours to complete. So you can see here that there could be entry around this area here, and then probably there's a good catalyst coming out. So we are probably going to make it all the way to the top over there. So you decide to open up a swing play. You decide to open it down here to realize profits up here over the period of a few days. Now, the investor, what if we're talking about an investor that likes 1 year holds? Well, the investor that bought the SPX here in March of 2023 bought it at 3,800, and it's sitting at around 5,700 now. But during this process, sure, you had to endure a lot of trial and tribulation here. But it's what you prefer. That's what you have to find. That's what you have to find. And we can help you do that. Are you the investor to observe time like that? Passive gain. Well, because you may have a job that doesn't allow you to day trade. That doesn't allow you to stick to a screen for multiple hours a day, if not multiple days a day. Maybe that's not your deal. But we can understand how to become those, and we can learn the strategies based around them. Because the strategies of a short-term trader really are not that far from an investor, except that an investor would take into consideration a little more fundamental than the short-term. Sometimes the immediate short-term trader does not even need a catalyst at all to gain their career whatsoever. At all. Now, being a well-versed trader would mean that you would have the combination of the discretionary trader, the fundamental trader, and a systematic trader. And you are able to swing the markets and play the markets all based around, let's see, your immediate short term to swing trades all the way up to investment strategy. A well-versed trader. You know how to scalp the markets. You know how to momentum trade, how to day trade the markets. You know how to swing trade them, and you know how to invest. So you've set yourself 3 different brokerage accounts. One for immediate short-term day trading, one for swing, and one for passive investment. Cool. Damn. Imagine the possibilities there. Imagine how far you can go. Having all those things grouped. And for that to happen, I need to ask of you something very specific. I need to ask of you something that may tell you that, you may not see as like, oh, well, how the hell are you talking about that? But, why are you saying that, ARCa? Is what I'm going to tell you. Okay. So what I want from you is that while we're learning and while we're understanding how this happens, I need for you to know that this is something that you need to, guys, I need you to keep your eyes off the money. You heard that right. You heard that right. I need you to not focus on the money. Yes, you are here because of the money. But I am telling you right now, if you are here just to make the money, you likely will not make it. And that's because the people that do this, most of them, I can't think of one that I personally know that doesn't. We do it because of the craft. We do it because of the passion and because it's strategy behind it. It's a game to me. It's like a Rubik's Cube to me. This understanding how to do this as a passion is not that hard. What I want you to do is to reach deep down inside in your collective memories and think to yourself, after passion do you have so that you can exploit here. So if you're good at swimming, if you're good at chess, drawing, if you're an awesome mechanic, if you like to do community service for people, if you just like to help people, right? If you like, I don't know, if you like walking, I want you to really identify what that craft is. And tell me, and tell, or not even me, just tell yourself or ask yourself, am I actually good at this craft? Whatever it is it the swimming or the solving a Rubik's Cube, or your athleticism, or your chess games, or your video games, right? Are you exceptional at it? Are you like actually good? And then remember what it took to get there. And remember that how it got there is likely without any money, but you got to love it despite any monetary gain. It never had anything to do with gaining money. It was just simply because you loved it, because you loved skating, because you loved playing video games. It was just because of the sheer love for the craft. And that was it. And you became amazing at it. What was it? Identify that craft that you have. Identify it. And we're going to dissect it. And we're going to rip it apart into a million pieces and understand how you got there. And we're going to do that with the trade. And you're likely going to see similar results, and you're likely going to have a similar love, a similar respect. Oh man. Once you identify that, guys, it's going to be powerful. It's going to be powerful. Now, I want you to look to the left and to the right of you right now, here specifically, and I'm talking about in the chat, right? We have a few people on YouTube. We have all the master students sitting in Discord right now. Everyone here, just see the participants that are around you right now. And we can consider this 100% of attendance, right? By the middle to end of this course, we're going to end up with around 30% of you still hanging here. And that's the nature of the beast. But I'm saying it out loud because it is a truth that I have to come to terms with. But I'm not telling you this to discourage you. I'm telling you this because I believe in you. And I don't want you to be part of the statistic. I want you to be part of the solution. Because in all reality here, what I'm going to teach you is not really for you. What I'm teaching you here, I'm really hoping that it's for your families, that it's for your kids, for your grandkids, for your parents, for your aging parents, right? For someone you care about, a friend that's dying, that's been an eternal friend forever, a friend that just needs a hand. Or no one needs a hand, but you want to be the helping hand for the family forever in case of anything. That's really what I'm doing this for, in hopes that you can find light for your families. So screw you, right? Let's do it for the families and for our kids and for our dearest. I will teach you guys everything I know if you allow me. I segmented this course because that's my idea. I didn't, guys, my original 19-week or 18-week course was not enough time. And from that 19-week course, I have some pretty powerful traders already. I have some pretty powerful traders considering they took the 19 weeks, and they're already very, very, very successful. And I still feel like I can get it to be tighter. And I can get that knowledge to really, really, clench those fists, right? That's what I'm doing, is I know that I can pull out more from my brain so that I can really describe it to you and then create an even more invincible trader from it. So this beginner's mentorship, the introduction, has a bit of everything, but a lot of the beginnings, a lot of the fundamentals or the rudimentaries. It's rudimentary in its nature, right? For you to learn what this is. So we're going to learn starting just like how I did. We're going to start with raw price action, with the candles. We're going to know what they are, what they represent, why they're even there. You know, before we cut it out, I can actually give you an example of something, right? Let's go into the chart one more time and let's pull up a 6-month time frame, right? Now, what I want you to see here is something that has happened historically, and it has like a great weight to it, you know? So specifically speaking on a formation like this, let me point it out to you, right? This one here, these two candles, let's zoom in on them. Well, when you're observing two candles like this, these two, you're able to see that you have this body, right? Slightly above the green one to the left, right? And then at the bottom here, you can see that the body completely engulfs the prior green one, right? Okay, so this is a formation. That's called a formation. So that's telling you that this is a bearish engulfing. Okay, so if you have a bearish engulfing, that means that price action is likely to lead to the downside after that, right? Now, there's another formation embedded within this. Now, within this formation, there's also something called a tweezer top. Similar wicks in size, identified to give you something called a tweezer top, and that's very bearish as well. And then guess what? There is also another formation within this too. And that's actually called a red outside bar, a true red outside bar. Courtney, that's very observant. I'm not going to go that advanced just yet, but yeah. So when this happens, you have a trifecta of bearish signals, a higher probability. And now another thing that you could take to your advantage here is this. The higher the time frame, the more predictive the probabilities become. So if you're looking at this on a 5-minute time frame, that has a lesser probability than it would on a 4-hour time frame. That's because the minutes happen so much more, which means that this bearish engulfing becomes a dime a dozen. It happens a bunch of times in a 1-minute candle. 1 minute, 1 minute, 1 minute, 1 minute, infinite amount of candles printing. This is bound to happen so many more times. We know what that is simply by a word, and that word is dilution. And you know what dilution is. So diluting is just going to give you you're going to have an infinite amount of candles printing. So you're going to print this formation more and more and more often, thus introducing the higher output of failure. But what if you put this on a higher time frame where it happens a lot less frequent? So then you start to see that this is a valuable formation, that it's likely to lead towards something because it gives you enough time for everyone to see. And you're taking 6 months to print one candle. So you can see just how valuable this is opposed to a 1 minute. Right? Okay. Now, this formation is a bearish engulfing, tweezer top, true red outside bar. And that happened. Now, what about, what year was this? Okay, that was 1972 to 73. Look at this here. We have another one right here. Red body is slightly above the green, and the red body engulfs the prior green bar, and it does have a tweezer top as well. And look what price action did. Another signal. Wait a second. Look at this. Another bearish engulfing downward. Look, another bearish engulfing downward. Look at this. Bearish engulfing downward. That what year was that? Okay, that was 1957, 56 to 57, right? This is a tweezer top here, and we got downward. We got downside price action. Look at this. Bearish engulfing downside. Let's take it even further. How about this? What is this? That is a true red outside bar Bearish engulfing. What year is it, and what can you tell me about this year? Let me know in the chat what it is. Who knows what this is here? Torito's giving it to me. That's right. No, guys, it's not a joke. That's the Great Depression. That it's literally the Great Depression, 1929. This is the start, the crash of 29. And it happened with a bearish engulfing on a 6-month iteration. Now, I mean, I can, the crash of 29. I mean, I can take you further, right? Here's another one. This is 1901 to 1902. Bearish engulfing, downside. Should we continue? I mean, guys, we're gonna go to the 1800s there. But look at this. That's 1929. What does that have to do with anything today, ARCa? Like, why are you talking about all that crap? Well, I'm talking about all that crap because it just happened. Freaking look at this. This is 2021 to 2022, 6-month bearish engulfing downside. These are simple formations. Tweezer top, true red outside bar, bearish engulfing. We're going down. You need to get out of the market. We're going to know these things. We're going to learn them. There's no way we can go. There's no way we can go without knowing this, guys. How about this one here? What's this here? Oh man, 2015. Wait, bearish engulfing, tweezer top, down. 6-month iterations, guys. It took us. It can take you forever to just come and look at a 6-month chart and be like, whoa. All right, we're not looking pretty good here, man. We're not looking all that good at all. There's likely a crash coming in. So then ARCa comes in, and on YouTube, he says, guys, we are likely to fall off the freaking cliff over here. You're a hater. You don't know the movement right here. You can't read the charts. The charts don't tell you shit. ARCa, you don't know anything. You are paid by the institutions. You are a short seller. I know that you're Ken Griffin. I knew always you were Ken Griffin. And that's everybody getting all mad because I'm about to say, guys, it's about to fall all over your face. It's going to literally barf on your face. Get out. Right? And then everybody, no, the short interest is like at 1,000,000%. And everybody on Twitter X in the communities are saying that it's about to go to the moon. Everyone is saying it. But you're failing to look at the chart as like for yourself. But chances are is that you haven't educated yourself to even understand where the hell the chart is even at. Right? Like we don't know where it's at. So you're probably just gonna, bet on the words that a million other dudes said because the apes. And don't get me wrong, I was a fucking ape too. I was right there with you. I held the shit out of my AMC. From my first trade executed in August 21st, 2020, August 16th, 2021. That was my first trade. I didn't even know what stock was. I did it there. And I held that shit and I lost all my money. But had that not happened, that I don't know that I'd be here, I was more curious over who the hell was receiving all that money on the other side. I was sure I was bothered. Anyone would be bothered. But man, watching that money go, and I'm like, wait, who's getting that? Like who is receiving all those dollars and how many of us are in this? And then I start to do the research and there are millions. I'm like, wait, so if millions are in this and I just lost $200 just today, how many more people are in there? Tens of billions of dollars on output. What? I needed to know who that was and how that was done. I found Ken Griffin. The dude said, man, he done fucked up. He should have never said what he said. He said if it was like he was speaking directly to my face because guys, I'm extremely competitive and I try not to be. But he said it like this. He said, you expect to come on a Staples Center and score against Kobe Bryant? This is my court. You're playing my game. These are my rules. When he said my game, playing my rules, it was fucking over. My competitive edge, that was a strike like no one else. So I studied him. I wanted to know who he was, why he was, who he hired, why he hired, and what else does he hire? Like, what do you do? How did you become that? And then he said quantitative analysis. And that's when I started understanding that quantitative means mathematical. So mathematical could be probabilities. Probabilities are done by statistics, and statistics are numbers. And at the end of the day, numbers don't lie, people do. So I immediately jumped in and I started studying the crap out of that. And here I am. No complaints. My son was dying. I was about to lose all my house, all my cars. I was about to lose everything. But I didn't, because there was no other way for me to go but up. And I didn't take, guys, I wish you could have seen those hours while I was studying, while rocking my sick son to sleep for hours. Sometimes he wouldn't sleep for 4 hours and it was already deep into the night. So I would rock him with my left hand while I did all these studies, while I would understand math. Guys, I did not have a super good grade point average. I didn't know math at all. I literally taught myself statistics. I taught myself some physics. I taught myself all this so that I can do this. I taught myself how to code, algorithmic, so I can create the tools that I need for trading. Because somebody else says, oh, you think your indicator is going to tell you everything? They made that indicator so that you can lose money, but you're forgetting that I made the indicator. And I'm not going to trust anyone. But that's just because it's me. Like, I'm not going to put the hands of any, guys, I'm really critical. And I'm really passionate over this thing because my son kind of damaged that. Or he improved it. Whatever it is, if he improved it, then damn, that's a fire. It's a fire inside me that I never thought I had. I just don't want him to die. That's all I care about. I don't care if I don't get the money to buy a fucking Lambo or anything else for myself in life, as long as my son is alive. That's all I cared about. That's all I wanted. And that disparity was for that. And it was still wrong. So I had to remove my son dying from that so that I can learn the craft and the passion of it and the love for that. I had to fall in love with a game while getting my heart broken by watching my son literally wither away. I'm not going to guys, I'm not going to lie to you. It was a tough time. And from that, ARCa was built. ARCa Bulls was made out of all that. So do you want to know the concoction to make a powerful trader? It's that. It's take a man's everything away. Kill his son, do all that. Like, do all that to someone and see how they bounce back. Or they don't. It's either going to be rock bottom or full on success. And I was not going to do fucking rock bottom for my son. I would be dead before that shit happened. So this is what I have. This is what I have for you. I'm going to teach you. I am going to teach you everything I did. And I'm going to cut the time that I took in half. And the time, guys, I thought it was a dummy. I was already in 6 months of all this studying, and I couldn't believe it was taking me that long until somebody said that you need 3,000 hours to become consistently break even. And I didn't realize that I was already at around 4,000 in my first, I've been, my first execution was August 16th, 21. We're in October of 24 right now, guys. That was my first execution. I studied almost 16 hours a day. I charted and I had screen time alongside that. And then when I built YouTube, I then used to catalog. You guys remember there's a ticker picker for my OGs that are still there. I used to catalog anywhere between 14 to 21 different tickers of people asking me to look at. You guys are responsible for making me better. So I would do that every single night for a year straight. I have charted more than 1,000 charts, guys. I don't even know. I lost count. I have statistical probabilities on dozens of charts. Information that I'm gathering right now for a book that I'm putting together called literally ARCa's Playbook. I'm putting it together because of all this crap that I learned, and that's what I want to teach you, and hopefully I can try to get you there faster. Hopefully I can get you to understand that this is more than just money. This is more than just go in and look at it as like an ATM. But guys, when you figure it out, like I did, and like many other traders did that I finally found out later, it's an eye opener. You're going to end up looking at this and you're going to look down at your chart. You're going to look up one moment, speak to somebody, and then you're going to come right back to the chart where you were. And out of nowhere, in a split second, you're going to see it. So many of my master students have already told me they got that moment. They said it happened out of nowhere and they finally understood. And I'm humbled and really excited, but also incredibly jealous, right? Because I had to figure it out myself, right? I did have a mentor, guys, but my mentor, he was short biased, which is why I'm short biased. He's been in the markets for like 25 plus years, and I was never next to him. So he would call me and give me 1 hour conversations every other week. But now when I talk to him, it doesn't matter what time it is. He'll answer the call and be available no matter what. And I'm eternally thankful for that. And it's because I had such little time with him that I was able to really absorb. I made sure to write notes like crazy. I made sure that whenever he spoke, I took count of every single individual word that he said, because I know that I wasn't going to have him for 2 weeks after. So I did. And it got to a point somewhere last year, a year and a half ago, where he said to me, dude, I have nothing else to teach you. He goes, in fact, I need you to show me a couple things. And that's, to a lot of people, that's the ha, motherfucker, I got you. But to me, that was not that at all. To me, it was extremely emotional. I didn't want him to say that because I felt like I was shaming him, but I love my dude, you know? I felt that I was making him look bad. Like he assured me that I wasn't, but it was just, I didn't like it. I just didn't like it. So I told him that he would always be better than me. And that's the truth. It is. Because, had it not been for him, I wouldn't know all this discretionary. You guys trade with me in the trading team every day, and you see how our plays go out. And these high probability plays, big ass targets being met, entries, and then we're all like, whoa, we got all this fucking cash. That's not my, guys, yes, it is my systems trading because I built the system, but that's his. He taught me that, the discretion. And I don't know how to take credit for all that. That's not it. It doesn't matter. It's just, I need you guys to not focus on making the cash. Don't focus on that. I need you to focus on solving this puzzle. I need you to focus on solving the puzzle, guys, because that's the most important, most critical thing that I can ever, and I fucking promise you, ever express to you. Let go of the idea of making money. It's not the best thing for you to do. I want you to understand how to structure this. I want you to know how to make this really I want you to know how to put it together like you would your outfit for going out at night, or like how you would a meal for your significant other or for your kids, because you're going to learn how to create something else just so your kid knows that you know how to do that and they look at you like a hero. How you put together your proposal for a wedding, or your wedding proposal for your significant other. Just as creative as that, I want you to be able to be just as creative here in a stock trading, because it's not always about the cash, guys. It's about really making a play. So if you're able to create, if you're able to put together this and have everybody witness it, then you just made a great play. And then when you made that great play and then it worked, like you won out of this motherfucker, then that also now brings you back to your craft. And for me, it's a puzzle. So I solved the fucking puzzle with the play. I can't deliver it to you in any other way other than how I'm doing it to you, because that's how passionate I am about it. You guys will always hear that from me, and I swear on everything. I study till I can't keep my eyes open anymore. Every day, I still do. That's because I want to make a greater and greater and greater play every single time I come in. I want to wow you guys every single time. So I learn something new and I learn something better and something greater every time. I mean well for all of you. And to give you just a little bit of information here, because I know that I still have a few of you guys kind of lingering out there. The day one of these courses is always the most difficult day. And it's always the most difficult because you guys fucking make me get in my feels. Then I have to express to you all the deepest, darkest things that I don't want to talk about because I've already passed them. I've already gone through that. I don't want to talk about it. But I do it because you and your families deserve it. And if you're able to channel the energy that I am literally expressing through this mic and into your ears, if you're able to channel it for the good, then you may actually have a shot at creating an eternal career out of this. Because I fucking did. I turned $80 fucking into nearly $200K in fucking 3 years. And I don't give a shit. My son is alive. And my house is still here. And I still have my cars. Damn. I will never look at any of those things or my son the same way again. You really take things for granted when, shit, man. I will never, ever look back the same way I did again, and I will never look back again. But I will give you guys my this piece of knowledge. I want you to be part of this. I want you to make your choice. It doesn't have to be with me, but whomever you do decide to go with, make sure that they're fucking honest and forward test them. See if their targets meet on the next day or not. Are they actually good? You put it together. You figure it out. I don't care if you don't come to me, because you know why? Because I'm here to teach you this. As soon as you learn this system,